Hi everyone, welcome to the Q4 quarterly performance update. Q4, Q3. I don't know why I'm in Q4, living in the future. Yeah, made it on time for once. Hopefully everything goes smoothly this time. Last time I had quite a lot of technical problems at the start, and then I forgot to change the screen to show the presentation. So everyone was listening to me saying lots of interesting things, and then didn't get to see anything that I was talking about. So hopefully I can avoid that this time. If it's your first time here, I'll quickly go through the usual disclaimers and such. As you can see, I've got the presentation up this time. We're off to a good start. So obviously, none of this constitutes financial advice. Please do your own research and due diligence before making any investments. All investing comes with risk. I do not understand your personal circumstances, so cannot give any personal recommendations or advice. This is for information purposes and educational purposes only, and entertainment, I guess, perhaps. Volume's a bit low your side. If anyone else confirms that, then I will try and increase it. I put it up a tiny bit. Yeah, all of this is obviously not financial advice, so please keep all of that in mind. The way I usually go through this is we go through a brief introduction about myself, my trading strategy, how I kind of look at investing, my history, my background, who I am. Then I'll talk a bit about the markets through the quarter, look at some benchmarks and my performance against them. After that, we'll talk about some highlights in my portfolio and how individual positions performed and the kind of trends and things that were driving the market. Then we'll finish up with a quick look at my previous outlook section and my outlook for the next kind of 6 months or so, looking ahead. Once that's over, there'll be a Q&A at the end, so if you have any questions, feel free to... Volume is low. Oh dear. This is not off to a great start. How about now? I don't know if that's made it worse or better, to be honest. It says 0 dB. It doesn't sound great. Okay, hold on. Let's have a look. Okay, how about now? Has that improved it a bit? Typical that I cannot get through any presentations without issues. Volume is fine, says one person. Well, hopefully, much better since you increased it. Okay, hopefully it's good now. I swear I never have any of these broadcasts without some sort of an issue. Okay, where were we? Yeah, so as I was saying, I go through an introduction about who I am, my history, my strategy, how I kind of look at investing. Talk a bit about the benchmarks and performance, how markets have performed. After that, we'll look at the kind of events and catalysts, I guess, that have been driving markets. Any interesting news. Trading highlights, so really portfolio highlights, positions that have kind of done well or done poorly, or where there's some important news for my portfolio. Then after that, we'll look at the outlook that I had produced in the last quarter, so we can kind of check against it, and I will give updated kind of outlook for the next 6 months or so as well. Once that's all done, there'll be a Q&A at the end, so if you have any questions, feel free to ask them at the end. You can ask them during the broadcast if you want, and I will go through them at the end. Obviously, if there's something wrong with the stream, like volume levels or me not showing the right screen, then feel free to harass me until I notice as best as you can. Okay, let's get started. So I'm Jay. I'm sure most of you are familiar to me at this point in the chat. Even some other popular investors in here as well. So always nice to see. I've been on eToro for a pretty long time now, since 2013, I think it was, when I first joined. So over 10 years on eToro. I became a popular investor in 2017. That's when I quit my job to do it full time, which I've been doing ever since then. I'm qualified with the CISI. I have a certificate in sustainable and responsible investing, and I also have level 4 qualifications in investment management. So I am qualified and at least know something about what I'm doing. I'm actually hoping to continue doing some more stuff with CISI soon. Maybe looking at doing more on the sustainable and responsible investing side of things. But I think that's a future thing. My CAGR since joining, compound annual growth rate since joining eToro, sits at just under 30%. It dropped below it for the first time this quarter. But as you'll see later, I think performance-wise, we're still looking pretty good. I'm very ethically motivated in my investments. I try to invest sustainably and ethically, and that really forms a core part of how I invest. My background before becoming a popular investor, I was a professional gamer and then an esports event manager, and a few other jobs in between. So that's kind of where I was working before I quit to do investing full time. Some quick metrics for you. All of these numbers obviously are as of the end of the previous quarter, so Q3. Total annualized return of 29.66%, as I said, just below 30%. Assets under copy remains about the same, so $55 million. Copiers, 12,500 or so. It is still dropping slightly. The Philippines recently, unfortunately, eToro removed their support for that country, and I know I had quite a lot of copiers from there, so I'm very sad to see them go. But obviously, that's impacted my copier numbers a bit over the past month or so. So a bit of a shame, but what can I do? Many of those people have been on a journey copying me for a good 4, 5, 6 years now. So yeah, a bit of a shame, but these things happen. My lifetime return on eToro, it sits at almost 1,650%. That's a weird way of saying that number, 1,650% almost lifetime return. So if you copied me on day one, that is the return that you would have got, which is pretty good, I think. I think most people would agree that's a good return for 10 years. A bit about my strategy and my approach to markets. I'm still on the verge of changing this slide and kind of removing the last two because they are such a minor part of this. But broadly speaking, I consider myself to be a growth investor and very disruption orientated. So I try to look for disruptive events or themes, often inevitable themes, or as close as possible to certain themes. Things like climate change, for example, I consider to be a certainty, and so trading around that is, an inevitable long-term win. Even if I get the timing slightly wrong, trades that are based around that trend should come good eventually. So those are the sorts of things I look for. AI, crypto, I was very early on. Electric vehicles, I was very early on. So yeah, these are the kind of things that I like to invest in. When I'm doing my research, I tend to focus quite heavily on the products and services offered by these different companies. Or in the case of crypto, I spend a lot of time digging in and making sure that I fully understand how it works and what the advantages for that crypto are. So that can involve things like reading user manuals, training videos, everything in between, going out and physically seeing products as well. Fundamental analysis obviously is the next step. This is something that I think everyone really can do in investing, and everyone does do. This is the same kind of thing that you'll see all the big banks and hedge funds and things doing, which is why I think looking at the product is so important, because I think that's where you get an edge. If you understand the product, you're probably a few steps ahead of the average Wall Street analyst who's sitting in an office and has never actually interacted with those products or the people who use them. But I do obviously spend a lot of time on fundamental analysis as well, looking through the balance sheets, income statements, etc. I also like to vet anything that I invest in for ethical and sustainable standards. Um, I still haven't really put these down on paper. It's very hard to do that. Anyone who looks at the kind of ESG space knows that there's like a million different ways of measuring things and putting numbers on things. So broadly speaking, my kind of attitude towards it is whether or not the business or crypto is a net positive for the world and for society. If it is, then I'm happy to invest in it. If it is not, then I am not so happy to invest in it. Portfolio fit comes next. So this will be looking at correlation between different assets in the portfolio, making sure that it is, not exposing us to too much risk. Really, most of this is actually around risk management. So position sizing comes into play if there's negative correlation or kind of hedging benefits to having a position versus other things in the portfolio, etc., etc. Last of all, there is sentiment analysis and technical analysis. Sentiment can be everything from looking at reviews on Yelp or TripAdvisor or something like that, all the way through to looking on Twitter and on charts and things to see how investors are kind of reacting to news, reading articles, all that sort of thing. And then technicals is the last thing, looking at the charts to make sure that the entry and exit points that I have for different investments are good in the kind of shorter term, I would say. In terms of my portfolio positioning going into the quarter, the same kind of 6 core trends are there. These really have been pretty stable now for the good part of 3 or 4 years. Electrification, probably the biggest theme in the portfolio. I have a lot of exposure through various different companies here in the kind of space of building electrical components and infrastructure, and some other kind of periphery areas around that. Semiconductors, AMD, of course, is the one that's pictured here, but NVIDIA as well, you can see below in the AI category. Samsung, I've invested in quite a few different companies in this sector for a long time. AMD I bought about 7 years ago now, I think, back in, I guess it would have been 2016 or 2017. Software as a service and technology. This is probably the most broad category. It's really hard to try and create these categories. I mean, you can use the kind of different sectors and things that are used by markets more broadly, but I find those to be quite inaccurate as well for trying to actually relay to copiers exactly what's in the portfolio. But in this category is everything from Microsoft and Google through to some kind of more niche or specific companies like Garmin, who make sports watches and satellite equipment, things like that, or Spotify, as pictured here. Buildings and infrastructure is again quite a broad category. A lot of this, I think, comes to the kind of themes around smart cities and smart buildings. So although the kind of picture here is of a lumber company, Boys Cascade, even they are innovating quite a lot in the kind of materials that they do. So they do kind of glue laminated wood materials that are much stronger than traditional timber, being used to replace steel in a lot of buildings these days. In innovative kind of truss technologies and things like that as well. So even in these kind of industries that are seen as quite traditional, I try to look for disruptive technology. AI, I think everyone's talking about AI. I was talking about it before it was cool, and then it obviously took off pretty dramatically post-COVID when we saw ChatGPT kind of making its first big leaps. And then last of all, there's sustainability. So this can be everything from hydroelectric exposure, batteries, things around EVs, even companies that are trying to kind of create a more circular ecosystem. I include in this little area of the portfolio. There's a lot of overlap between these themes as well, so keep that in mind whenever you're looking. If you want to understand more about how I've kind of categorized different companies into this, I wrote a really long post on eToro about a month ago, covering the entire portfolio and every position in it. So do feel free to have a look at that if you want to. Okay, so looking at Q3 of 2024. As you can see, not a great quarter for us, actually. I will explain that further. There was one specific event which really did cause quite a bit of disruption, around 3.5% of impact on the portfolio, if I remember correctly. So that really on its own is what held us back from kind of keeping up with the benchmarks a bit better. That said, we're only actually slightly behind the Nasdaq, if you look here, so it's really not too bad. Europe had a much stronger quarter than the US, perhaps because most of the elections were out of the way for Europe, and kind of it was seen as a bit more stable. Whereas I think the US, it was a bit more of a question mark about who's going to win and what that might mean for markets and certain sectors. Okay, let's move on to year to date. So 15.74% for the year so far. Again, it's not fantastic. Again, I think the impact of the event that I'll talk about in a bit really is the reason that we're behind here. Otherwise, we would be in line with both the Nasdaq and the S&P 500 more or less. So yeah, overall, I'm still pretty happy with this. I don't think the event that happened really was foreseeable. And I'll skip to the chase. The event I'm talking about here is what happened with CrowdStrike, which was right at the start of this quarter of Q3. So I think it was in July. And yeah, they had a big outage. The share price took a massive hit, as did Microsoft, which was kind of linked in and tied in with the whole situation as well. But overall, I'm pretty happy with how things are going. You can see that I do compare more favorably than the European markets here as well. Last up, we have the trailing 12 months. This is the one that kind of brings me a bit of joy. If you go back a few presentations, you will see that I was lagging behind the indices quite a bit over the past year or so. We've just underperformed for the past year and a half, especially during the kind of bear market move in 2022. But the portfolio is holding up a lot better these days. I made a lot of changes at the start of this year, and even recently in the past quarter, I made quite a few position changes as well, and those have really played out quite well for me. As you can see, we're basically in line with the US markets here, which is good considering that we're running a more sustainable portfolio. We're a bit more limited on what we can put into the portfolio. And of course, we did have the event with CrowdStrike and all of the hardship that's been hitting the renewable industry as well, which we were very exposed to at the start of the year, especially in the first half of the year. Quick look at some of the highlights for Q3. Obviously, as mentioned, CrowdStrike outage causes chaos. There's a picture of the airport. Delta Airlines actually are in the process of trying to sue CrowdStrike for the costs that they incurred as a result of the outage. There were flights grounded. There were hospitals that lost their systems. People were doing manual data entry for everything because they couldn't access all of their computers because of a buggy software update that was put out by CrowdStrike. They fixed it reasonably quickly, and that's great and all, but realistically, when you listen to the earnings calls and things, they do acknowledge that there has been kind of a reputational hit and a hit to their earnings as well for a while as they kind of deal with the fallout from this event. That being said, I think for me, really, ultimately, it doesn't prove anything that's bad about the company per se. If anything, it highlighted just how many businesses and how much of the world is reliant on CrowdStrike and their competitors in cybersecurity. So the other thing to consider, I guess, is that we did make a really strong profit on this company before this happened as well. So yeah, it was a massive event, though. It was global news. It affected everything because there were so many tech companies that were relying on this service, and it affected their servers. So then people couldn't access products like Oracle and many of the kind of software tools and things they use to do their jobs. Next up in the same month, pretty similar timeline actually. I think it was maybe a few days later or maybe a bit earlier. I can't remember. Trump was at a rally and had an assassination attempt. This, I think, many saw as a potential turning point for the election. Um, it kind of rallied a lot of people behind him. So yeah, massive, massive news. I wouldn't say it really impacted markets that much, honestly, aside from potentially people kind of betting on Trump winning a bit more than they were. That said, that was then kind of changed again by the pullout of Biden from the race and Kamala Harris stepping in instead. It was, I think, until the election, most people were expecting it to be a bit closer than it really was. But obviously, we know what happened now. We have the benefit of hindsight. So, yeah, we're now kind of looking at how to best kind of handle the markets now that we know that Trump is coming in. The Fed started cutting interest rates. Yeah, they're making all the right kind of noises. When you look at the jobs data and things as well in the US, it's not really flashing any big alarm bells in terms of recession. Usually the unemployment rate will jump up as a kind of an early signal that there could be a recession incoming, but we're not really seeing that. Unemployment is still very low in the US at the moment. Um, so yeah, we're still watching the situation quite closely, but it seems like the US economy is actually quite strong at the moment. So I expect the US to continue doing well for a while yet. Obviously, we are still kind of on the lookout for the potential recession risk as well, though. Bank of Japan surprise rate hike. This was massive news when it happened. I don't know if I need to really go into the details, but essentially, Japan is well known for having incredibly low interest rates, often negative interest rates. They don't really raise rates. They've always been quite stable and low for the past decade or so. It's part of their kind of Abenomics kind of outlook on the economy. But they decided to lift their interest rates, and of course, many investors previously had been using the Japanese yen and the bond market over there as a source of kind of free money, as it were. When interest rates are negative and they're paying you to take money, people were obviously doing that and then investing that money elsewhere. So when this interest rate went up, suddenly they realized that actually they needed to make more profit on their investments in order to kind of pay that money back. It's known as a carry trade. This was a really big deal. It affected the value of the yen as well. So the yen went up in value, which then meant they owed even more money because when they exchange it back from whichever currency they're in, they didn't have enough to buy back the currency that they owed for the debt, essentially. China supporting markets is the final thing here. China's economy has been on the ropes for a while now, but finally Xi Jinping has kind of stepped in and started to help out the markets and provide some support as they're still kind of struggling with the I guess the long-term effects of COVID, of the kind of change in demographics of their population, more and more of the manufacturing industry kind of moving into other countries like Vietnam. So there's a lot of different factors affecting China's economy at the moment, and so yeah, they've stepped in to try and kind of boost the market a bit. In terms of my portfolio, I already mentioned CrowdStrike, so I won't go into it too much. Um, it was my largest position at the point when this issue occurred. It was sitting at well over 10% of my portfolio, I think even close to 14% or so. So obviously, when it fell by in excess of 50%, I think by the time everything was said and done, that obviously hit my portfolio very hard. You can imagine that even just the basic maths, right? If I have 10% of my portfolio in it and it halves in value, then I've lost 5% on my entire portfolio value. So that again explains why this quarter was a bit weaker. I don't really worry about it too much. I did do a bit of damage control. I took some money out when the news hit, and then rebought shares once it had gone a bit lower. Because I'm still really confident in the business and the kind of trajectory for them over the long term. Small caps did really, really well this quarter as well. UI and Lovesac, probably the two best performing positions in my portfolio this quarter. One of them, UI, is Ubiquity. They make server equipment. That's what the picture is of there, and cameras and things like that, and have kind of a software suite that supports it. Lovesac is a company that makes sofas and beanbags. Doesn't sound all that exciting, but yeah, they had a very, very good quarter as well. They've been hit hard over the past couple of years by market conditions because they were a bit of a growth stock, but their balance sheet is healthy, and the same is true of Ubiquity. And finally, I think investors are starting to realize that, and they've been doing really, really well. Spotify posted their best profit ever. Really, really good quarter for them. They've since had another good quarter as well. Really happy with how that position's going. It was a bit smaller at the start of the quarter, and at the point where the earnings came through. Still, obviously, a nice boost for the portfolio. I've since increased position there because I see them as really having almost a monopoly in that kind of market now. The addition of video and audiobooks and some of the other products and the AI kind of stuff that they've been adding has been going down really well as well. So yeah, I'm quite happy with how that company is performing. And then last up, HP is acquiring Juniper Networks. That was announced much earlier in the year. I'm not sure, I haven't checked the price recently, but I believe it's still undervalued by something like 6 or 7% compared to the final sale price. So it's been approved by most of the regulators now. I think it's really just kind of waiting for everything to go through. But this obviously is what I see as quite easy money, really. The deal is going to go through. We know what price it's going to go through at. So if we buy Juniper shares and wait, then we will get a good price for those shares. And I think that's reflected in the share price. Again, I need to look at it again. I haven't looked at it recently. It may have actually leveled out now closer to the price of the sale. But it made a good return for me in the portfolio, even though it's a small position. A kind of brief look through what I said before about Outlook. So obviously the US elections were a big deal. We now know how that has unfolded. But yeah, this was something that was very important for us. We knew it was going to affect some of the solar stocks and renewables, energy, crypto. All of those things were kind of things that we were looking at, and sure enough, it's pretty much played out as expected. I think the reaction in solar has perhaps been a bit stronger to the downside than I was really expecting it to be. But I'm not sure if markets have necessarily priced that correctly. I'll maybe touch on that a bit more in a post soon that I'm planning to write. The electrification trend has been a bit sluggish for EVs, as we know. And I think really when looking at that sector, I think I pointed this out before, there were quite a few companies that are really on the brink. When you look at the financials for companies like Lucid or even Polestar and Rivian, these kind of like pure play EV companies that were trying to follow in the footsteps of Tesla, they're all very much running on empty in terms of their balance sheets. So not a great position for them. Trump coming in obviously is affecting that as well, but this is something else that I was looking at. I think that the industry will consolidate and get stronger though, and I think there are some clear winners there as well. I mean, it was several years ago now that I mentioned the Korean car companies of Hyundai and Kia being probably the best picks in the industry. Unfortunately, we don't have access to them on eToro because they're listed on the Korean stock exchange. But both of those are up something around 60 or 70% since then, and are, I think, the best performers in that sector. So, yeah, although we can't trade it, it's still something that I'm following very closely because it's something that I'm interested in. I think I have a good track record investing in EVs. So, yeah, something I'm still watching. And then, of course, the soft landing was the last thing that we mentioned. When interest rates were going to kind of come in, and the impact of that on markets, if we're going to have a soft landing or not for the economy, or if we're going to potentially see recession risk flashing. Looking at the outlook, the updated outlook that I've given this time. Did I? Okay, yeah, I was just making sure that I did actually did actually do that correctly. I thought I might have not updated it, the slide properly, but I did. Yeah, interest rates looking good for my portfolio as we move into 2025. It's expected that the US is going to continue to drop rates. The UK recently did another rate drop as well. So yeah, things are looking good on that side for me and for investing generally. Obviously, if interest rates are really high, then it's much more tempting to just leave your money in a bank and get your easy 4% or something. If you're only expecting maybe 8% in the markets, then it's a bit easier and more tempting to do something like that. But as interest rates drop, the interest rates that you can get in the bank obviously go down, and the potential in markets go up. So yeah, I'm pretty excited about that. I think there's a lot of opportunity in some of the various different growth sectors that I mentioned here: medtech, fintech, agritech, even as well, robotics. These are all areas that I'm still kind of looking at and trying to analyze. The EV industry, I mentioned it again here. It had a pretty rough time recently in Germany. Volkswagen has laid off, I think, quite a lot of staff and made massive cuts to the salaries of staff as well. And really, this is because of the influx of EVs from Korea and China that are kind of taking the market by storm a bit, especially China. There's a lot of talk about tariffs coming in for the US and Europe on Chinese EVs. I have invested in BYD. I still have a position there. I've reduced it slightly recently, made some good profit there actually. And then geopolitics, I think, is obviously one of the really big important things to be looking at as we head into 2025 and we see Trump come into the office, and see how he handles things in Ukraine and Russia. Obviously, in very recent days, we've seen the US kind of giving more permission for Ukraine to strike inside Russia and use US long-range weaponry, and UK as well. So yeah, there's a lot going on that front. There's talk about what's going on, and there's obviously everything that we're looking at over in Asia with North Korea potentially still building up forces and troops now that they've got to deal with Russia and they're receiving slightly more advanced weaponry. So that's something to be kind of keeping an eye on. And then obviously China's situation with Taiwan, which I don't think we're going to see anything on imminently, but I do still see it as a sizable risk that's worth looking at. Okay, that's all for now. If you are one of the people that likes to follow me on social media, these are my social media nicknames. I'm also on Blue Sky now. It's quite new. There's not very many people on there yet, but if you're on there, feel free to follow me. My name is Jaynemesis, the same as everywhere else. Please be vigilant and beware. I will never send you messages about some cool secret investment anywhere outside of eToro. That is the only place that I let people copy my trades. I do not give personalized investment advice, so I will not message you with any kind of investment advice on things like that. So please be wary, because there are still impersonators and scammers out there trying to catch people out. So keep that in mind. If you have any questions, now's the time to ask them. I will scroll back up a little bit through the chat and see what you've been asking so far, and obviously answer what I can. Okay. Planning to add more Google. Thought on recent monopolistic news. Yeah, the news on Chrome with Google, that is interesting and is not really something I was expecting. So they're attempting to break up the monopoly that Google is seen as having at the moment. Yeah, I didn't see that coming. I don't think it's necessarily a massive deal. I think the biggest disadvantage is obviously with Chrome, the default search is Google. Obviously, you can change it because of the different laws that came in the US and Europe to try and stop them having such an easy monopoly. But most people don't, and this could have quite big ramifications for their AI for Gemini, because in the same way that they made Google the default search engine, they were making Gemini the default AI. So yeah, this could be bad news for Google. I don't think it's really that big of a deal though, really, when you think about it. In terms of the areas that I think are kind of driving growth for Google, I think there's still obviously a lot going on in cloud, and then YouTube is obviously massive, and I don't think those are really under any threat at the moment. So I don't think it's too bad. It's not something that I would really consider adding more money to though, given that news. Yeah, it's not great news, but I don't think it's terrible. And I think you see that when you look at the share price of Google. It hasn't, it hasn't kind of had a really poor reaction to that news. Considering the crypto bull run that's happening, do you intend to invest in some crypto? Yeah, if you look at my portfolio, I do actually have some Ethereum in the portfolio again now. I also, much earlier, I think near the start of this month maybe, added Square back to the portfolio, Block. Jack Dorsey's company, they hold quite a lot of crypto themselves, a bit like MicroStrategy. And so if the price rallies, then their valuation should increase as well. And obviously they provide crypto services. So the more people that are investing in crypto, the more revenue they're going to be generating as well. So that's another position that I added quite recently. And then I also added some exposure to Coinbase as well. So yeah, I was paying attention to the crypto thing. I was waiting for the election results to come through as well before kind of taking any action. But I have actually added a little bit more crypto exposure to the portfolio recently. I may look at adding more. I don't want to go overboard because as much as there are obviously the kind of the bulls in crypto that will be saying that this is the next big bull run and it's going to 3x or 4x or something. I still find that to be relatively unlikely. I don't think we're going to see Trump necessarily making like a big national kind of crypto fund as part of the kind of national reserve uh, supporting the US dollar or anything like that. But I do think obviously he's going to be a lighter touch on crypto. It's been very good for Ripple as well. XRP, we've seen that have a massive rally as a result of this, with the news recently about Gary Gensler stepping down as well, head of the SEC. So, yeah, broadly speaking, it's good news for crypto. I think there is some risk as well, though, that we should be kind of aware of, which is that as much as things look like they're going to be positive for crypto, the fact is that if there is too little regulation, that can also be a bad thing. Like, let's not forget what happened with FTX and some of the other big kind of scandals and scams in crypto, and some of the kind of the crazy shenanigans that goes on in the altcoin world. If that gets too much, then obviously that will impact public perception, and there will be consequences to that could affect the kind of broader crypto economy and ecosystem. So, yeah, I think when you look at all of that and kind of round it all out, and you think about what really is the growth potential in crypto right now, yes, it's strong and it's probably better than most other investments. Even AI, now that it's kind of hyped, probably isn't going to produce quite as strong a returns as crypto could, but it's not the same as what it was for the 2017 rally or the 2014, 2013 era either. So something to keep in mind. I think it's very easy to overexpose yourself to crypto right now, expecting massive returns when in reality they will probably be strong, but not extraordinary necessarily. I'm sure I'm gonna look back at this in 6 months' time and regret everything I just said, but that's the way I'm looking at it at the moment. Uh, let's see. Um, Daily P&L on your copy yesterday was quite high. Since Trump's election, clean energy sector took a dive. How are you handling this? Yeah, I mean, I'd already reduced exposure quite a bit. Realistically, there are kind of three core positions in the portfolio that are dramatically exposed, which are SolarEdge, Enphase, and First Solar. All three of them took a really big hit. They've all been very volatile, actually. I mean, there was I think earlier this week there were days where Enphase and SolarEdge were up by 11-12%, and then the next day they were down by 11 or 12%. So incredible volatility in those instruments. But when you look at it overall in my portfolio, the total exposure across those three positions is something around 3% or so now. So it's really not very much exposure. I think the problem with it is that you could kind of give up on it and say, well, it's going to have a bad year, and we should just take the losses now and wait and come back in 4 years when Trump's gone. But realistically, I think there's a few different things to look at here, right? The first is that Elon Musk is the person in the ear of Trump, and he produces a lot of batteries and a lot of electric cars. Both of those things work very well with solar and renewables. So I don't think we're going to see this kind of crackdown on it. It's more that he's going to be focusing more on oil and gas. So I don't think we're really going to see anything negative per se come in for those things. Maybe some support for some of the kind of incentives may dry up. But companies like Enphase and First Solar, who are onshoring production at the moment to the US of a lot of their equipment, will still benefit because that's one of Trump's key kind of policies, right? Is that he wants to onshore more and more manufacturing. So those companies should still benefit from that. Fundamentally, there's still a desire in the US for cleaner energy and for more energy as well. So I think we will still see, especially on the kind of commercial side projects, a lot of growth there. It's just going to be a bit painful in the residential kind of side of it for a bit, I think. The other thing that I think is really worth looking at is the valuation of these companies. They have already been battered for the past 2 years. They can't realistically go much lower. If you go on pretty much any of the kind of cookie cutter ratings sites that kind of will produce a score for you on the valuation of a company, or discounted cash flow models, things like that, and you run the numbers through for Enphase and SolarEdge, you will find that they are marked as incredibly cheap on most of these websites, and that's for good reason. They are still fundamentally profitable businesses for the most part. SolarEdge is trying their best not to be. And they still have a huge total addressable market. They still have a massive advantage in terms of how many companies there are. The industry is consolidating. Lots of other solar companies have been going bankrupt over the past year or so. So yeah, all of these things kind of play a role, I think, in justifying and not getting rid of exposure, because really, how much lower can it go? And how long will it remain that low? I think we're still likely to see those companies do well over the kind of longer term. So for me, when my exposure is as low as it is, I don't see any purpose in cutting exposure any further. So I'll just maintain it, I think. Okay, you sold Nvidia. Yeah, I sold a bit of Nvidia. I still got an awful lot of Nvidia in the portfolio, but I closed out a bit of Nvidia to add crypto exposure. China had a good bounce in September, but now it's going down again. Any idea why? Are you planning to invest in Chinese stocks? I think the reason why is pretty obvious. It's Trump. There's been a lot of rhetoric out of his campaign about how much they're going to tax China and kind of continue the trade war that he started during his last term. How much of that will actually come to fruition, I'm not 100% sure. Europe is in an interesting position because they're kind of stuck between a rock and a hard place. Do they still benefit from the cheap kind of products coming from China, or do they sort of side with the US more? They kind of, to some extent, they have to choose who they want to trade with, especially the UK, I think, actually, is in a position where they need to kind of decide where their allegiance is in terms of trade because of the impact of Trump. But yeah, I don't really see things as that positive for China, even though we saw them making all of those moves to kind of boost the market ahead of the elections. Obviously, when Trump came in, that then hurt them again a bit more. So we'll see. I still think there's good companies in China for sure. And I don't think it's a bad thing to have some exposure there, but I certainly wouldn't really want to be taking that kind of bet necessarily in any large capacity. New Orion LLM for OpenAI doesn't seem better than old ChatGPT 4. It feels like current LLMs are starting to fill the data will be a serious bottleneck. Meanwhile, it seems like everyone is pricing AI for crazy growth. Are you worried the AI industry cannot meet the growth demands and break through the current LLM models? Thoughts on profitability in the area? This is a good question. And yeah, I think we have seen that a lot. The language models are starting to kind of stagnate a little bit. Certainly, it feels like the growth in AI has slowed down a bit from what we saw at the start of the year when we were kind of constantly seeing these big iterative updates. That said, I think when you listen to what they're saying at Google, at Microsoft, all of these for all of these different LLM models, and beyond LLMs as well, they are talking about AI still progressing at a very, very rapid rate, faster than they anticipated. So it remains to be seen. I think probably the second half of your point is the better question to ask, right? Which is about profitability and what's really going to come of this. For sure, there's been good utility for companies like Microsoft and Google who can integrate them into their kind of product suites for business. I think if you're not in a position to do that, then you're in a much weaker kind of area in terms of really making revenue from this. The other thing is I do think we are kind of towards the top of the bell curve in terms of demand for semiconductors for AI. NVIDIA's obviously announced recently that it's moving more into the software side of things. I don't think that's a coincidence. I think they know that the hardware side of things, is not going to continue at that growth rate that we've seen inevitably into the future. And so they're trying to diversify a bit and make sure that they have some exposure through their partnership with Google to the kind of software side of things. I think as long as you're in those kind of big kind of mega tech companies, whether it's Facebook or Amazon, Google, any of those guys, I think you're pretty safe in terms of the investment in AI being justified. If you're in some of the smaller names, I think it's a lot more risky for sure. Yeah, we'll see how things develop. I do think that it's definitely in a cool down period. I mean, if you look at this quarter, actually, I don't. I'm just looking up at my chart at the moment. Yeah, AMD was basically flat for that quarter. Nvidia was down 5% in Q3, and I think Q4 is looking relatively similar as well. And we saw Nvidia earnings just a couple of days ago as well that weren't fantastic. So yeah, there's definitely a slowdown occurring. Realistically, is the share price going to crash? Probably not. It's just going to kind of go sideways for a bit, and then eventually it will rebalance and continue moving upwards. Long term, I still see Nvidia and some of the other kind of semiconductor companies as a good kind of bet, just not as compelling as they once were. Do you think Amazon Prime could ever pose a threat to Spotify? I'm not going to lie, I don't know why I'm subscribed to Spotify when Prime is awesome. I don't think so, honestly. I think the problem with Prime, I mean, it's the same as their video service. Like when you compare Prime Video with Netflix, right? Yeah, people will use it a bit, but there's not very much on there. Ultimately, music is a bit different. Their catalog is much better on music, but it's still nowhere near as extensive as Spotify's is. And then again, when you look at the kind of, obviously they have Audible and things like that, but Spotify is moving into that space as well. I think Spotify's brand is just much more kind of pure. When people are kind of thinking, I want to listen to some music, they will think of Spotify before they think of Prime Music. Yeah, the people who are looking for value will probably move to Prime. But yeah, I don't find it that compelling. I don't think it's really what Amazon's focusing on either. That's the other thing. I mean, if you look at how early Amazon was into live streaming music and video and audiobooks and things, they really had a first mover advantage, more or less. They were the first competition with Spotify. They were the first competition with Netflix, and they were the first really in audiobooks, full stop. but they never really have done much with it. They're much more focused, I think, on the kind of B2B side of the business, whether that's their cloud stuff, some of the AI things, or obviously the kind of core Amazon platform itself, which obviously isn't so much B2B, but I think they're much more focused on those areas. For solar, what path back to glory do you see for SolarEdge and Enphase? Do you think the risk-adjusted return is fine still for those? Yeah, this is really the problem. There have been some sharp shocks in earnings, especially on SolarEdge, that have been painful and were worse than I think most investors were anticipating. But the problem is that after that, the market already digests that news instantly, and then you're left with, okay, well, let's reanalyze it at the price that it's currently at. Is it a good prospect at this price? And the answer consistently has been, yeah, it's not bad. It's either not bad or it's good. So yeah, it's been very difficult for investors in both those businesses to really justify getting out, I think. Obviously, there are plenty of people that were overexposed. I was one of them, especially last year. But yeah, when I look at it, as I mentioned earlier, I think the long-term future for those companies is still very strong. I think also people do undervalue the kind of the network that these guys are building as well, especially Enphase and SolarEdge, where they are essentially getting these inverters into every household, and then they are the people that are controlling all of that data. And as we see with AI, data is incredibly valuable. As the grid continues to electrify, we're seeing more and more of these kind of distributed power plants where they're utilizing people's battery storage systems and their solar and things to help balance out the grid at various times of day. And I see there being a lot of money in that over the long term, and these companies are in a good position to benefit from that, more so than pretty much anyone else. I mean, Octopus Energy in the UK is also doing that. There's potential for a few other companies to kind of edge into that space, but I think that these guys are really well positioned for it, and very few people are talking about it. It's a long-term trend. It's going to take 3 to 5 years before we really see the impact of it. But if you're a patient investor, then I think it should pay off eventually. Okay. Last couple of questions. These are great questions, by the way. Thank you. Finally, despite Alphabet not being in your portfolio, do you have any general thoughts? I think they are in my portfolio. By the way, I'm trying to think about if I got rid of them or not. I think they're still there. Do you have any general thoughts on Congress ordering Alphabet to sell Chrome? Yeah, I mean, I think I've already kind of covered this, so I don't know if there's really that much to add. Do you think something similar will happen to Microsoft and Apple? Not really, honestly. I'm a bit surprised to see that come through, but I think also when you look at the incoming kind of administration, I don't think they're the kind of administration that's going to be clamping down on big tech. Big tech are the people that funded his campaign. So yeah, I don't really see it happening, to be honest. I'm not massively concerned about it. Yeah, I'm not too concerned. Okay, my voice is starting to go, which I think is a good sign that it's probably time to close this down. I brought up the socials again so that you can make sure that you're following and subscribed in all the right places. Obviously, if you have not done so, please do check out my portfolio over on eToro. Please be vigilant against fake accounts and fake me's trying to sell you on the latest cool crypto project. That's not something that I'm likely to do. If you missed any of this, you can, of course, watch the full recording on YouTube tomorrow once I have edited it and made sure that everything's set up correctly. So yeah, that's all. If you have any more questions, feel free to reach out to me on the feed or on social media. Thanks for watching, and I will see you all next time. Bye.